Got to turn these wicks down. They're too bright. Matter of fact, while I'm here, candle colors. I'm gonna leave them on. All right, it might be late. More people might not file in or whatnot. I think I've given it enough time. But just to get started, the first thing that you have to have is support and resistance. Okay? So, in order to be able to use that calculator, you have to be able to define areas of support and resistance. Turn my music down just a little bit so I don't feel like I'm yelling at y'all. So you have to be able to define areas of support and resistance. Okay? And if you look at this point and this point over where this wick came up, we can say that this is an area of resistance. So Alt H, and we'll put a line in right there. Yeah, about the trading view alerts, executing trades. Yeah. Yeah, I would have to go into my Discord to do it, and because of the configuration issues I was having, I don't want to put everybody's name, out on a YouTube video. So I'm pretty sure I remember who it was, but so once again, just look for support and resistance areas, whatever you're going to define in your trading as a support or a resistance. And in this case, I'm just going to go ahead and use candle bodies for the most part. Oh, my magnet's on. So this particular one right here, I'm going to lower a little bit. And the reason I'm going to lower, yeah, it's the high there, but it's kind of missing some of these wicks, and you could turn it into a zone. You could also use boxes to define your areas, but you'll kind of see how this works out here in a minute. But I'm going to lower this one down just a little bit so that I can catch as much as possible with all the wicks. There's a lot of wicks right in this area here. I don't really care if it kind of wicks up above them, because your stop loss whenever you use this calculator will kind of take that into account. So now that I've got two support and resistance levels, let's just go in a couple more. And in case y'all didn't know, you can use Alt plus H. What's going on, John? Hey, it's good. I've just been waiting for people to kind of file in anyway. I'm just now getting started. So just take and throw in, whatever you define as a support and resistance level. Okay, and that's where a lot of this stuff is. Why didn't that one go? There we go. That one popped in. And I'm doing this out here on a daily chart. Just looking for some key levels. I'd say that this level was pretty key up here. Yeah, right there. So we're kind of in a range right now. But you can What did I do? All right. So now that we got some support and resistance levels in, here is the key to how that calculator works. Okay. Let's say, like right now, this is a pretty good example. And once again, like I said, I'm out here on a daily, putting this stuff in here, and you can tighten this down into another range if you want to. But what you're looking for is to know where you're planning on your entry. So let's say we planned on shorting this entry right here. Okay, you would use your long short tool. I'm using the short tool right here, and you would put your stop loss past another resistance. So you get all this buffer zone right here for your resistance. Or let's say, even if you wanted to wait for this area here to put in a short. And obviously there is some more resistance up here. Now you've got a resistance level right here. I'll go ahead and use a higher level. Let's say you're coming up on a key level, and you want to put in a short at that key level or around that key level, maybe just before that key level, and put your stop loss up here past the key level. This tool right here, the long and short tool, which is over here, got a long position and a short position. This tool right here, see right here where it says 3.73, it gives you the percentage away from whatever entry you're planning on putting your stop loss. And that is the key number that seems to confuse people about the spreadsheet. This particular trade, if you were to execute this trade, would be a 3.57 to 1 trade. So a 4 to 1 trade. So if you shorted from up here and price got down to here, it would be a 4 to 1 trade. But that's not important for the spreadsheet. That's the reward side of the risk. I'm really wanting to focus on the risk side. So once you get the risk side, then you can worry about the reward. Figure out how to stop yourself from bleeding. Stop losing money. So what you would do then is open up your calculator, okay? And our number was 3.73, okay? You would open up your calculator, and in this box right here, type 3.73. And we're going to assume we're trading with one Bitcoin that's worth $10,000. This Bitcoin, okay, if you wanted to risk 2% of this $10,000, okay, and I'll explain more about this here in a moment, but I've got this spreadsheet where it'll change colors for you. And these numbers over here, you can juggle them around, and I'll show you that also. So if you wanted to execute that trade I just showed you on the previous screen, with the stop loss 3.73 away on Bybit, you know, this works for Bybit, or any exchange where you can control your leverage yourself. So on Prime XBT, or if you're using cross leverage, I don't know that I would do this. You want to be able to manually put in your leverage. You would put in, you would go 11x, and you would, to risk 2%, you would use 5,360 contract. Whenever you do that, you will only be using approximately, and the spreadsheet only approximates, it's not dead to the number. So you would be using approximately $200 worth of margin to execute this 11x trade with 5,000 contracts, and you would only be risking 2% of your $10,000 that you have in your trading account. Everybody follow that so far? Give me some thumbs ups. Kind of follow what I'm saying. or everybody's too far away from their computers or whatnot. Now, if you change around the numbers, for example, this 20% area, okay, chunk, all right. So let's say you change that to 20%. Now you're risking 1% of the $10,000 and only risking $100 worth of margin, and your trade would be 5x 2,681 contracts. And you can change these numbers around to be anything you want for whatever your risk tolerance is. I am not telling you what your risk should be. I'm only telling you how to use this spreadsheet. And just to give you a couple different examples, there's different ways to play this spreadsheet. And this side of the spreadsheet is for if you're trading with the trend. I have it over here where it does the math in half if you're trading against the trend. Okay? As you can see, it dropped your risk by half. And this box right here, let's say it was the same trade and it's against the trend, you would actually put the percentage over here. You can have this totally different. Whatever you want to do on that. Everything else, you can change this box, this box, this box, this box, and this one. Now, let's look at some crazy risky trades and see what the spreadsheet does. So let's say you were risking 10% of your portfolio. You wanted to risk 50% of that. Going to have to bump the numbers up just a little bit. But as you can see here, if you wanted to risk 10% of your portfolio and 50% of the 10%, that would be a 5% trade on the line. You would have $500 margin at risk. It would be 13x with 13,405. Okay. And once again, against the trend, it would be just be half of that basically, but it does all the math. Now, let's say you said, I'm going to risk 10% of my portfolio and I want to risk 75% of that 10%. As you can see up here, now it just told you that you've entered a risky trade because you are risking 7.5% of your portfolio. And once again, it is, these are just general guidelines. You don't have to go by this. If you want to risk more, you can. It's just a general guideline to say, hey, how much of my portfolio am I risking? So you can see it in a number real quick. You don't have to sit there, pop up a calculator on your screen, try to figure it all out. So it automatically gives you whatever your leverage is and how many contracts for that amount of risk. And it's basically that simple. If you get into super risky trades, you're risking more than 10% of your portfolio. You can see that these two areas changed red, just to let you know. But it's your call. It's your money. And like I said before, I am not here to tell you what the proper risk is. These are just good general guidelines as to how to figure out risk, how to figure out how much leverage, how many contracts to possibly lose this amount of money right here. And it's all intertwined. Now, let's say you don't want to try to figure out 20 and 75 and all this other stuff. Okay? You can even go up here, say I want to use my entire stack. But I only want to risk 2% of my stack. Here we are backwards doing it, but it still, if you do it that way, then it's going to, with that particular percentage, it's going to tell you to go 1x with 5,362 contracts. And I do believe, I'm almost positive that if you use 100% up here, and use this number here, that will actually be a liquidation style trade. So, you know, if you wanted your liquidation to be your stop loss and only risk 1%, you can do that. And that's a way to do a trade and not have to worry about doing a stop loss. That's another reason why I set up a Bybit testnet account, so that we can do some of this on some live streams, throw in some trades, and just see how they play out using the calculator. But you can, you know, ultimately you can change these numbers to anything that you want to. 50% of the stack. I only want to play with 5% of the stack, or I want to use 50%, and I want to risk 5% of the 50%. You know, all these numbers up here are almost irrelevant. This number right here is important because this is the amount of margin that you are using in that trade. This is the amount of contracts you need, and the amount of amount of leverage that you need, and the amount of contracts to be able to risk this amount of money. Okay, so I'm going to go back out to the chart, and we'll look at, you know, say a long. Let's go down into a smaller time frame, and you can see how this can really benefit you on some trades. So let's say we're going to call this right there. Let's take a bigger look at it. If anybody has any questions, stop me by all means at any given point in time. So that is definitely a resistance level right there. You can see a touch here, a touch here, a touch here. So we're going to put a line in right there. All right. And let's say we wanted to execute a trade a short based off of that. So our position would be somewhere in here, somewhere before the line, or you could put, you know, like 1, 2, 3, 4 positions and get an average where it's on the line. And you want your stop loss past resistance. Okay. And let's say our goal is to only get to here. This is only a 1.4 on a trade, so you're going to risk 2.2% in order to get 3.17%. So it's a 1.4 risk to reward. Really, what you want to try to do is look for 4 to 1 or higher trades. Okay, so we'll just, if you took a short up here, hope that it came back down here, or you had indicators that were telling you that it could potentially come back down here. That would be something that you could do or look at also. But anyway, 2.26%, or let's tighten it up a little bit more. Let me see if I can find something decent. Yeah, I don't know if that resistance is going to be strong enough. We'll take a look at it. Okay, so if we put it past this resistance up here, it would be 2.26. And if it was right here, somewhere in the middle of this, it'd be 1.12. So go back to the calculator, and you would put in 2.26 for the less risky of the trades. That would be I mean, if you want the higher percentage looks, then what you want to do is have the 520, or 540. Was it 240? 520 is the number for 1%. Okay. 520, it gives you 1%. 540 gives you 2%. But you can play with the numbers to figure out, what works for you. Stay with the 540, a 2% trade. So on the first of those two trades, at a 2% risk of your $10,000, $200 on the line, 2%, it would be an 18x trade with 8,850 contracts. Or the other one was like 1.25. There you can go 16,000 contracts. You're tightening up your risk for a potential higher reward. You would get stopped out within 1.25% of price movement, but you could go 32x with 16,000 contracts and still only lose $200. Thereabouts. And once again, this side right here is if we're in a long uptrend, but this side would be for, say, shorting against an uptrend or longing against the downtrend. And it's your choice which one that you would want to use. If you don't want to use the long and short tool, there is another way, and that would be with this date time tool. Okay? That is this right here, date and price range. So let's say you don't like all this green and red and you're not really worried about, what your reward is, which you should be. You should always be worried about what your reward is. You could use the date time tool to see what your percentage is between your levels. Right here you can see it would be 1.82%. Or between this level and this level would be 2.39%. But that's basically the gist of that particular spreadsheet. I didn't want to hit that. Anybody got any questions on it at all? Or is it clear as mud, or does it totally make sense now? And for any of you that don't have the spreadsheet, there is a link in all of my videos to a copy of that spreadsheet. And as I make updates to the spreadsheet, that would, if you just get it from the Google Drive, then, or always use it in Google Drive, then you'll always get the updates. Or if I make updates, I'll post it out here in a video. Now, there's another spot in this spreadsheet, these DCA levels. What I use the DCA levels for is if I'm not super confident. Yeah, if I'm not super confident on a trade, and if you look at the one that we were just talking about, or some of the ones that we were just talking about. So this might even be a good spot for, say, DCA levels. Let's say you want a dollar cost average into the trade, and you want to try to catch as much of the trade as possible. So let's put another support line up there, because we had a peak here. And actually, now that I'm down on this lower time frame, let me do this. So we want to move this line up just a little bit. So let's say you wanted to short all in that level there, but you don't know which one of these lines it's going to stop at. Okay? Let's say you wanted to place 4 different shorts, or 3 different shorts, or actually we'll say 4 different shorts because that'll be easy. Let's say you wanted to place 4 different shorts in that area. Okay? Try to catch that trade. This is actually where that other tool will come into play here in a minute. Matter of fact, get rid of that. Go here. All right, the distance there is 2.59%. So half of 2.60 would be 1.3. But it would be more. I just go ahead and use what it tells me. Let's see. Actually, that wouldn't matter. Let's just assume that every one of your DCA levels got hit. Put 4 different trades right here. Okay? 4 divided by 100 is 25%. If all 4 of those trades executed, then you would actually have an average entry down here. So you're actually even limiting your risk a little bit more. But we're just going to use this we're just going to kind of use this halfway area, maybe a little less than halfway for our risk tolerance. You could even come up here and use that. But let's just kind of use the halfway point, 3.37. Go to your calculator. Put in 3.37. All right. And 3.37 at 2% risk, or whatever risk that you decide that you want to use. Now, even if you wanted to use 4% risk, would be 12x at 11,869 contracts. It was 4 trades, so you would use the 25% levels right here. So each one of those levels, you would use 2,967 contracts in order to equal this number. Or let's say you were in a trade and you wanted to add on to the trade later on. And you may even want to, whenever you're doing this, is take this spreadsheet, save it, and say it was trade XYZ. Take a screenshot of whatever your trade is and put it down here so you see what you saw. You could also use it. Yeah, I can't do Bybit tools right now. Actually, I might be able to do it here. Just give me a couple minutes. So that is what these DCA levels are. So let's say you saved this information and wrote on your trade, and I'll show you another way that I've done it before too, so that I know. I've done it within TradingView or in my Bybit. Is I will go out and I'll put a text box and I'll point a spot and I'll put 3.37 12x 1189. Yeah, actually one day I'm actually going to link the Bybit tools to the testnet account that I just set up, so that I can actually not only show them Bybit tools but show them how to use Bybit tools. As a matter of fact, I think I'm going to do that video from start to beginning, because you also need to know how to link Bybit tools. There's 2 problems that can happen to you. So besides the IP address, there's something with your time. it can mess up, and I'm gonna mess it up on purpose. I'm gonna try to, so that it acts up. But yeah, this. So anybody else got any other questions? Well, I'm going to go ahead and call it a night on this stream. The main thing that I wanted to do was to cover this calculator. And I'll probably cover it even more when there are more people in here. But you'll see me using it real often. I want to do a lot of test trades and I want to test out some trading styles, philosophies, theories, trading against certain indicators, things along those lines. But that's to be done here in some of the future videos, whatnot. All right, guys, I really appreciate y'all showing up. I think I'm gonna go ahead and call it a night, and I'll see y'all in Discords.